Here we have the current stock market update for MicroStrategy Incorporated, stock ticker MSTR. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So what we have here is the shorter term time frame, this 15-minute price chart. And I wanted to look at this time frame because I think that it's important to look at this most recent trend wave movement into the negative direction. We have recently posted all-time highs near 267.89, and it was becoming quite clear that the stock was starting to roll over, out of overbought territory. There were bearish divergences that were occurring on the price charts on some time frames, and a lot of that information was just being completely dismissed because I remember one commenter saying that, well, it's not, that bearish divergence is not present on another time frame. And it's like, well, that makes absolutely no difference. It doesn't mean that, if you find a bearish divergence on a specific time frame, it would be expected to work out on that time frame. Just because there's not one on some other time frame doesn't mean that it doesn't, that the original chart formation doesn't exist. So that really is the wrong way of looking at this. And it's really indicative of people that, are in long positions. I mean, it really shows a lot about the psychology of market trading. We really, once we start to get into a position, we really start to look for confirmation bias and just look for reasons, to believe that our ideas are correct, when it should really be the opposite. I mean, we should really be looking for reasons to show why our position might be incorrect or might be wrong, because that is really what protects people from losses. And that is really the name of the game here. I mean, the first job of anybody trading in the market is to prevent losses. The second job is to make gains. You need to prevent losses before you can start to make gains. And most people aren't able to do that successfully, which is why they sort of throw in the towel and stop trading relatively quickly after they have some disappointing performances. So, we have started to see these trend wave movements lower, and this has now broken through important support zones at $239. As that happened, share prices also broke below all of these major exponential moving averages, and we're starting to see several crossovers in those moving averages. So, for example, here we can see this yellow line is crossing below all of these other EMAs. That's the 20-period EMA crossing below the longer-term moving averages, and then the same is starting to occur here for the 50-period exponential moving average, which is this orange line here. So it hasn't quite happened yet with this 50. The 50 period has not yet crossed over the 200 period, but it does look like we're on the verge of this imminently, relatively soon. So these are bearish signals, and then in addition to that, we'll just take a quick look at the indicator reading here, which is showing a lot of negative momentum at the moment. And this was sort of a problem, and this was really the main reason that I was calling out those, the potential for a rollover from those highs, is because there was a lot showing in the indicator reading which really wasn't supporting share prices trading at those elevated levels. There was a lot to suggest that the stock was going to run out of steam, and as we can see here, these negative conditions still remain in place. There is no positive momentum reading here, going all the way back to roughly the 7th of October, 2024. I mean, you would have to go back before then in order to find some positive momentum that is showing in the price chart. So, these two readings here are relatively equidistant. I mean, you could say that this longer term reading is a bit longer term in nature. It has also, I wouldn't even really say that it has been tested on more occasions, but it is a bit longer term in nature. But they are roughly similar. So these do sort of balance each other out, and they do sort of suggest that there is some neutral momentum that's starting to go and be built if you go back to the early parts of October. But if we look at things more recently, the majority of the momentum here is still focused on the downside. I mean, we've got these shorter term trends that were sort of working in combination with those prior bearish divergences on the 4-hour time frame. So in order to start to reverse the outlook here and to look more in the positive direction, I would definitely need to see a break probably back into the 240s. Roughly this 243.80 area is important because if we were to reach this price zone, you would then be trading back above the exponential moving averages. So that would be a bit helpful. And then also, this prior support zone that would be expected to work as resistance here would also be broken at that point as well. So I would need to see this break here in order to start to suggest that we're on an uptrend here, or we're ready to start to build positive momentum. This would need to happen first. You would need to see break back into the 240s, and then you can start to have a bit more of a positive outlook. But the way things currently stand, this does look like we're rolling over here at the moment. And the question is just where actually, where is the exact bottom? We can start to look at some Fibonacci zones here. Wrong reading. So if we look at some Fibonacci zones here, we can see that the 618 retracement does come into contact right around where share prices are currently. So, if we were to see a bounce here, it is possible that you could start to see some upward momentum generated through that $240 area roughly, but it will need to happen here relatively soon. I mean, if we don't see a bounce here, probably on Monday, then I would suspect that you're going to start to get some hourly closes below this 618 retracement, and then that would start to target much lower prices, probably back toward 205 or something around there. It's possible that you could see a bounce here. It's not totally out of the realm of possibility. But it's going to need to happen here relatively soon, because if we start to see hourly closes below, roughly 227.80, right around there. I mean, we've already broken below there in some instances, but if we start to see some longer term trading periods close below that level, then I would start to, really expect some further weakness. And then I would suggest that this recent decline, is not the end of those declines. Overall, just one final note about the, someone left a comment, and it was this was an intelligent comment that was being made. I don't even think the guy, he didn't even sound like he was long MicroStrategy, but he was trying to say that, he was talking about the melting ice cube and U.S. debt and things like that, and saying that, MicroStrategy is borrowing at these low costs in order to buy Bitcoin. And then, that is the strategy. That's the scheme or the plan, sort of the master plan that people are sort of pointing to here. But, it's what people have to understand is that still doesn't make any sense. I mean, if Bitcoin starts to move higher from there, then it would make sense for those valuations to start to increase. But there's way too big of a margin here between the company's market cap and the actual amount of Bitcoin that they hold. I mean, you would have to have a lot of faith in the underlying software business in order to justify those valuations. And when I say that you would have to have a lot of faith in those, you would have to have more faith in the underlying software business than you would in Bitcoin itself. Okay, and I don't believe that the people that are making these arguments actually believe that. I think that they're buying the stock because it's a proxy for buying Bitcoin. And what they really have faith in is the cryptocurrency. But that's not what people are expressing here with a long position in MicroStrategy. The valuations simply don't make sense, even with that argument. So it was an intelligent point to be making. I understand he was trying to, make an intelligent argument, but those valuations still don't come anywhere near making sense. I mean, it would make sense if Bitcoin rallies much higher, and then share prices start to move into those valuations. But I would suspect that if Bitcoin did rally into areas that would justify those price levels, that MicroStrategy would be rallying as well, and that the valuations still wouldn't make any sense. So here's the current market update for MicroStrategy Incorporated, stock ticker MSTR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.